Hi traders, welcome. 2 days ago, we experienced a big day in the markets due to economic data released in the US. Let's talk about what this means for the gold prices. Should we hold, buy, sell? Let's dive deep. Here's what we got. GDP growth for Q3. The US economy grew by 2.8%. That's stable, but slightly below the previous quarter of 3.0%. This tells us that the economy might be slowing down a little bit. Then we have jobless claims. Only 213,000 people apply for unemployment benefits, which is better than the expected. A strong labor market like this supports the strong US dollar. And then we have core PCE inflation. This is the Fed's favorite indicator for inflation, and it came in 2.8% exactly as expected. So no surprises here, but it still confirms that the inflation appears to be under control. So what does this mean for gold? Let's break it down. Number one, GDP is slowing down. A slower growth raises concerns about economic stability. And that's typically good for gold because it's seen as a safe haven asset. And number two, we have strong job markets, which on the flip side could mean that the US dollar could remain strong as fewer people apply for unemployment benefits. And a strong dollar tends to weaken the gold price. Why? Because gold is priced in dollar, making it more expensive for other buyers using different currencies. In number three, we have inflation data. So with the inflation appearing to be under control, the Fed might not feel the pressure to increase the rates aggressively. That's a slight positive for gold because a higher interest rate increased the cost of holding gold, which doesn't pay interest. So here's the deal. Right now, gold is caught between two forces. On one hand, slowing GDP and controlling inflation could benefit the prices. On the other hand, a strong labor market in the US could benefit the dollar, limiting gold upside. If you're trading gold right now, make sure to keep an eye on the dollar index. If we see the dollar weaken in the coming days, we might experience a rise in the gold prices. If you're holding for long term, these mixed signals might mean that you might want to wait for a little bit more of clarity to add to your positions. For traders, short-term volatility could provide us with some opportunities, especially if we're seeing movements in the US dollar or bond yields. As always, stick to your strategy and manage your risk. What do you think about the gold situation in the next coming weeks? Drop your comments below. See you in the next video.